Hey guys, Infidel1258 here. I want to talk today about silver and about the stock market. So, silver continues to be around $15.60 US per troy ounce, and the Dow Jones and the other major indices are doing quite well in 2019. After a late 2018, I would say, collapse, there's been quite a rally in 2019 in the Dow Jones specifically, but in the other indices as well. And so the question comes to mind, like, is the silver rally that we saw in late 2018, is that over? And are we going to now fall to lower lows? Because silver was at $14 US around November 12th. And then by the end of the year 2018, silver was at over 15. And as of last week, it was at 1570 something. So, but silver made that major, let's say 12% rally on the back of the stock market really suffering. And so if the Dow Jones is rallying in 2019, if the stock markets are recovering and bouncing, does that mean the metals are going to suffer, that bullion is going to suffer, silver and gold are going to suffer? And I think the answer is a strong no, because the main reason why we've seen a bounce in the stock markets in 2019 is on job numbers that have come back this quarter. The job numbers have always been misleading and problematic, and whether it's like a blue president or a red one, they always twist that data to make it sound like everything is hunky-dory. Inflation's a bigger problem than anyone admits. The job numbers are manipulated and misquoted. When you look at job numbers, one of the important factors is recognizing that after, I think, 90 days, if you don't find a job and you stop looking, then you're taken off of the unemployment list. You're not part of the unemployment data because you're not actively looking for a job. But what happens when there are no jobs for you, and let's say you have a unique set of skills and there are no jobs, and you know that, you're not going to keep looking needlessly. And so job statistic data is misleading because it excludes a whole body of people that have given up on looking. And then there are people in America and Canada that have jobs that don't really pay the bills, but they have a job. Like you work at Pizza Hut or Pirates, a pizza joint or a burger joint. And I'm not dumping on that. That's you work for a wage, good for you. But let's be honest, it's not going to pay for the middle class dream, the American dream. Own a home, white picket fence, two and a half kids. It's just not going to pay for that. And so you can find yourself, the job data is misleading because, one, it excludes people who are not looking because they know that they can't find a job, and two, it excludes people that have found a job, but it's not really paying the bills. It's not really making ends meet. And so, yeah, you can suggest that everybody's got a job, and you can suggest that unemployment is at record lows, which is, by the way, indicative of the fact that the interest rates are going to continue to rise, which is a problem for the stock market. And so let me explain that. When unemployment is really low, and I would argue it's not very low, but the data is being skewed to suggest it is. So the government is telling you the unemployment rate is really low. What happens next? Well, the Federal Reserve in America, when there is low unemployment, they raise the interest rates because the economy is doing well. And so that's bad news for the government, who has massive debt. That's bad news for corporate America, who has massive debt and who's been borrowing at low interest to buy back stocks, which has been driving up the stock market itself. And so the stock market is in a precarious place more today than it was yesterday, more today than it was in November and October of 2018. And yet it's going up. So buyer beware. Recognize that what they're saying and what is a reality is different. So the mainstream media is telling you that the bear market is over. The mainstream media is telling you that the stocks are rallying again, and it's justifiable because job numbers are great. Don't believe that. It's just propaganda, and they're hoping to, get middle class average Canadians and Americans to invest those savings into a quote a sure thing, so that you can so that the smart money, the big money, the corporate entities and the massive investors can make their way out. But I've said it before and I'll say it again. Sell the rallies, because the smart money is, and don't put your money in those investment vehicles, because fiat is by definition manipulated. Everything through the purchase from the Federal Reserve into that system, but they're slowing down on that. That's called quantitative easing. They're slowing down on that, and they're pulling back, meaning quantitative tightening, which means that they're selling back those things that they bought in 2009 and 2010 and 2011, because they've been buying bonds and stocks for 8-9 years, which has caused the bull market in the stock market. And now they're starting to sell. Well, who's going to buy? It's not you and me. If it's not corporate America, it's not anybody. And I promise you, it's not going to be corporate America. First of all, we're going to have a major recession, and the U.S. stock market is going to plunge. I think the Dow is going to reach 18,000 before, let's say, before 2020. And that would be by itself a massive move. But I think that's the tip of the iceberg. I think 12,000 is a significant reality, and that's probably within the next 5 years. And I don't see us coming out of that for at least a few years after that. So over the next 5 to 10 years, I'm expecting massive drops in the stock market and corresponding gains in silver and gold. Right now, the price of silver is so ludicrously low because of paper silver manipulating the price downward, and because people think that they have a sure thing in the stock market. When they realize that sure thing is a bubble and it will fully pop, they're going to come flooding into silver, into gold, and you're going to see the silver to gold ratio move from 82, where it is now, down to, I think, in the near 10, the 10 to 1 ratio. So 10 ounces of silver will get you 1 ounce of gold. And it'll probably then bounce, it'll normalize to around 40 to 1. So, I think that's one of the plays I'm looking for, but that's probably best saved for another video. Suffice it to say, don't believe the hype. U.S. economy is not booming. The job numbers are manipulated and misquoted, and it's just propaganda. And all of the wise money has been selling these rallies in the stock market. If you're in the stock market, do yourself a favor and get out. When the liquidity dries up, this is Lynette Zhang's quote. When the liquidity dries up, it'll happen in a heartbeat, and within 24 hours, anyone holding derivatives, paper silver, stocks that they don't, of a company that is questionable, the money's going to evaporate. It's going to be gone, because there isn't going to be a space or a place or a way for you to get physical US dollars in exchange for those investments. And conversely, things like silver and gold, physical silver and gold, the real wealth in your hand, will be positioned and poised to have its biggest gains probably ever. I think we're going to see $5,000 gold, and I think we're going to see $100 silver. And again, as I've said before, I don't measure my wealth in fiat dollars, and I think you shouldn't either. So I'm not looking to sell my silver at 100 US dollars, but I am looking to sell my silver when the gold to silver ratio moves in a much more favorable place. Let's talk more about that another time, guys. That's all for today. If you're in the stock market, sell the rallies. Get some silver, get some gold. Thank you so much for your time and attention. Have an awesome day. God bless.